Let's talk about the energy market that continues to drift lower now. What's your thoughts on that and how maybe that starts to impact, I think, the overall bull market?
Yeah, crude oil just got bludgeoned to start the week. Sort of broke out of that really tremendous support level that was on WTI, where it was about 75 and a half, 76 and a half area from where it consolidated in March. So to see that really surrender here today, I think is a little worrisome. At best, a little worrisome. I've recently started adding a little more energy, maybe a day too early. I added ConocoPhillips at the end of last week as a new position in portfolios. I like the merger acquisition, of Marathon Petroleum. I think that's a really great setup. And I think that's been a key theme here in the energy space in general. Some consolidation, look at some of the larger names are looking to reduce costs, some integration there that's going to help them increase free cash flow. So, you look at whether it's Chevron and Hess or Exxon and Pioneer, kind of Conoco and Marathon Oil, when they're acquiring names like that, it shows there's value in the space. So that's a positive. And a lot of these analysts are marking energy still to like $60. So it's a lot of these companies' balance sheets, when these analysts are doing their work, are marking it to $60 oil. So, as long as we stay above, 70 per se, I think there's tremendous value from the energy names. But when you get to WTI, I think this maybe could be a little reaction, a negative reaction to some of the OPEC meeting. Maybe they didn't do enough. I haven't been able to bury myself too much into what may be the exact driver here today, some technical selling as well. But, I'm watching that, underlying crude oil very closely here in the coming days to see if we can't bounce back. And again, I think ISM manufacturing may have had, something to weigh on that. I'm broadly saying when you look at retail sales data or some of the better GDP data we've had over the past 6, 9, 12 months that have surprised everybody, that's been a tailwind to crude. I mean, those days when you see that data come in strong and yields are higher and the stock market may be knocked off a little bit, crude oil is typically stronger on those days. It's not surprising to see it lower, but I am a little worried seeing some really technical damage on the chart now. It's going to create some pretty tremendous overhead supply to get back above $76, $77 in WTI.
Yeah, oil's like a catch 22, right? I mean, if it's going up too much too quickly right now, everyone says, well, so much for inflation going away, right? And if it starts to go down, everyone says, well, there's not enough demand for crude. So, we're in a slowdown. And so, how does it all fit in the context of it? But I think you laid it out really well. Like a lot of these companies, when you look at oil stocks, they're still making money. They may not be performing as well as some of the other sectors, but that makes sense right now, I guess, in this environment.